Hey, what's going on, guys? In this video, I'm going to be talking about a small account strategy I have not discussed yet. I know so many people out there are trying to grow their small portfolios, so today we will discuss making more out of your Leap options. How to have your Leap options generate some extra additional income on a weekly basis. I'll show you the whole mechanics of this strategy and how you can leverage it to generate income while paying a small amount of money to be long undervalued shares in the long run. This is a very good strategy for a small portfolio. A Leap option is much cheaper than buying shares of a stock and has many advantages, which I'll show you some examples on. And selling calls on your Leap options gives you consistent premium. So basically, I'm going to talk about how to make consistent weekly income within your small or medium-sized portfolio. If you stick through this video and follow the rules, you'll likely see massive profits over a decent period of time in any market environment. Let's jump in, but first, you have to tap that like button for Uncle Henry. It helps out the channel and it makes a really big difference in the YouTube algorithm. Starting off with a Leap option. It's best to buy a Leap on a stock that has sold off and is cheap. I'll show you some parameters I look for and an example in just a moment on Palantir. The goal is to pay a little bit of money and have a position that makes as much money as a covered call option play would. So now we're going to take a look at Palantir's options. We want to purchase a Leap call that will see price changes similar to the stock. So look for a call option with a delta of about 0.8 or more. As a starting point when searching for an appropriate delta, check options that are at least 20% in the money. I'll show you exactly what that means. But for a particular volatile stock, you may need to go even deeper in the money to find the delta that you're looking for. I'll show you why that is so important using Palantir right now, and I'll show you an example of weekly covered calls. So first of all, buying a call option. The most important thing for Leap is you want to go out about 1 year. So today is June 17. I'm going to go out until March 17, which would not quite be a Leap by definition, or January 19, which would be about a year and 1/2. So I'm going to go for a year and a half. Unfortunately, Palantir does not have exactly 1 year. So January 19, 2024 will be the play that I'm going to look at. Now, Palantir stock is at $7.80. Check out Palantir's technicals. Palantir was trading well above $20 for a significant period of time. And then obviously the stock market has fallen down, with tech stocks taking a really big beating, especially the high volatile tech stocks, because as interest rates rise, these tech stocks are less attractive. Now Palantir has sold off to levels where I think it's just absolutely cheap on a long-term basis. Under $8 per share is about 1/3 of the price that it used to trade within. Now, it's not likely that the stock is going to pull back up to $25 in a short swing, right? That's just not likely to happen. But if Palantir reports some good earnings, this stock can be a $14 or $15 stock again. So I expect that to take some time. However, this Leap call option going for January 19, 2024 gives us plenty of time for that to play out. So what I'm going to look for right now is a $10 strike, and I'm going to see what the delta is. Now, obviously, this is an out of the money option, and the delta is 0.56, far from the 0.8 that I'm looking for. Now, if I click the $5 option, the delta here is 0.82, which is perfect. I'm looking for about a 0.8 delta. This is a 0.82 delta, meaning there's an 82% chance for this option to expire in the money. And fun fact in poker, if you have 2 aces, the chances of you winning is also 82% if you're playing one-on-one. So this is basically a very high probability play, very awesome. And the break even on this Leap call option is $9.08. Not too bad considering Palantir can go up to $14 by expiration. If it were to go up to $14, then the total profit would be about $9, and you're paying $4. So you'll be able to a little bit more than double your money, or turn $400 into $900, or $4,000 into $9,000. Now, let me show you how to make this a lot better on yourself. So if you do pay $400, that's fine. However, I'm going to show you how you can also make weekly income on this position. Okay, so total cost is $408, and your max profit is unlimited. And you can see right here that your break even is right here around $9.10. So a few things can happen. If Palantir ends up above $9.08 right here, our break even point, by January 2024 or on this expiration date, then you have made money. Another thing that can happen is let's say that Palantir goes up by $1 in 1 month. So what you will actually have is a profit, and you can actually sell this call option or this leap option and just get rid of it for a profit. And the exact amount of money that you're going to make is actually that $1 move times this 0.82 delta. So this option will go up by the amount of the dollar times the delta, which is 82 cents. Now, 82 cents is actually about a 20% return, because 10% of 4 is 40 cents. 20% is about 80 cents. And if this stock were to go up by $1, this option will go up 80 cents, which is actually a 20% return. So you can have a 20% return in 1 month or 2 months, right? You can have a very short-term swing of 10, 20%, or even more than that if Palantir recovers quickly. That is a very smart strategy, and I do like taking profit early. Whenever I see profits, if it's a 10, 20% return in a month, then that's gonna meet my hurdle for a rate of return. My hurdle is typically 5 to 6% a month. So if I'm making more than that, I'm very happy. And if I've made a significant amount more than that, then I will cut the position, take the profits, and roll it into another trade. Now, I did mention making weekly income. So the way you do this, the way you want to make weekly income on your leap option is by selling covered calls. When you sell covered calls, you collect premium. But wait, Henry, don't I need to have 100 shares? Well, no, you don't need to have 100 shares. And that is because this leap option right here actually acts similar to stock. Because the delta is so high, it's 0.82, your broker will realize that this option is similar to having stock. And you don't have an unlimited risk because you're long a call option. Now you can sell a call option against this long call option. However, you don't want to wait until January 19, 2024. So you want to pick an expiration date that is going to be expiring pretty soon. So June 24th will be about 1 week until expiration. Let me go into sell call option. Now I'm going to look to sell call options on a weekly basis, but I don't want to be too close to the money, because what can happen is if I sell an $8 call option and all of a sudden the stock goes above $8, then I'm in a rough situation where I have to either close the call option for a loss or end up rolling that call option and potentially taking a loss. Instead, what I like to do is I like to go out of the money. Instead of picking the $8 strike or even the 8.5 strike, the $9 strike is much safer. It has a 90% chance of profit, okay? And if I expand this option right here, the delta is only 0.12. So 88% of the time you're going to be winning, which is even higher than the delta of the leap option. And 12% of the time you're going to have to roll, which I have a video on in the description, or you're just going to have to close for a loss. Now, let's go and sell this $9 call option. I'll tell you why this $6 premium is actually a lot more exciting than you may think. So you may be thinking, well, $6, that's nothing. I can't even buy a Chipotle burrito. However, a $6 call option is actually pretty interesting because you're only paying about $400. So a $6 call option, which you're selling, is actually 1.5% in 1 week. Now, you may not have thought of that, but this $6 premium that you're collecting is actually a very significant amount. 1.5% a week is 6% a month, or 72% a year in premium that you're collecting. And there's a few ways to manage this position. So right now you can see the chart has become very, very wildly different. Your max profit is now capped at $113 because if this call option were to go up, you stop making money at $9 per share. However, there's a very high chance that that's not going to happen in 1 week, and 90% of the time, you're going to end up just collecting this $6 worth of premium. Now, if you were to do this over a 1-year period, $6 per week times 50 weeks roughly is going to be $300. Now, this leap call option will actually maintain its value so long as the stock ends up running up a little bit. So if the stock were to go up slightly, then your leap option is going to maintain its value and you don't have to keep selling a $9 strike. In fact, let's say in the future that the stock goes up to $9. Well, what you can do, and let's say in the future it's maybe September or something like that. Well, if it goes up to $9, you can start selling out of the money call option still at $10 or $11, right? So you can go with the stock's flow. You can follow its momentum. So as the stock continues to rise, you can continue to raise the strike price at which you sell covered call options or leap covered call options. That way you can keep up your income, and in most cases, if the stock ends up rising, you'll actually make money on your leap option and you will make increasing amounts of money on the call options that you're selling. And that's because a more expensive stock is going to have more expensive premium. Think of it in the case of Tesla. If the stock is $600 per share, well, even a $700 call option is going to have like $1,000 worth of premium. So in many cases, this strategy right here is going to help you make a lot of money in terms of premium, but also capital appreciation and increasing amounts of premium over time. This is why this strategy is so amazing for a small account portfolio, because the total initial cost is only $408, and you can potentially grow this $408 into $800 or more. So in the example of Palantir going up to $15 per share, that is going to be a gain of $10. So you can have a 2.5x return on the Leap call option, and along the way, you can also collect some premium from selling covered calls. Now, I do want to be honest with you, sometimes you may come across that you have to roll or take a loss on a call option that you have sold. However, in this strategy over the long term, you're most likely to still collect a lot of money over time, even if you have a loss 1 out of 10 times, because that 1 out of 10 times loss on the covered call option isn't going to be such a big deal, since you are long a call option to begin with, and then rolling that covered call into another strike price won't be that expensive. Or just taking a loss and closing it may oftentimes just cost you 10, 20, or something like that, something really, really low in comparison to the amount that your call option is appreciating. Now, the reason for that is because this delta right here of this $5 call option, again, was 0.82. So when the stock goes up by $1, you're making 82 cents. However, when you're selling a call option, right? So let's go back to, let's say July 15th, a 2 or 3 week call option. If I click July 15th, let's take a look at selling the $10 call option, okay? The delta here is 0.13. So if the stock were to go up $1, you would make about 82 cents on this call option, but you would only lose 13 or 14 cents on this covered call option that you have sold. So you still have a net gain of 68 cents, which is fantastic because you've also had a capital appreciation in the Leap option. You're not actually at a loss here as long as it ends up being below the $10 strike. So in many cases, you're going to be winning this trade maybe 90% or more, which is why this strategy is so powerful for small accounts. You can't use this strategy for larger accounts because it does get a little bit riskier in terms of putting big capital to work. But if you're putting $400 or even $4,000, you can turn $4,000 into $8,000 over a 1 or 1.5 year period, which is a very large return. And that's how you compound your small portfolio into a medium and larger account portfolio. If you have any questions, you can always join my Discord community where you can ask me questions 24/7. In the Discord community, you can also follow my trades, have access to myself and 3 other coaches. We're here for your success, and I want to see you succeed in option trading. Thanks for watching. Make sure to subscribe and like the video. It makes me really appreciative every day when I see people are enjoying my content. Thanks a lot. I'll see you soon.